Look, I'm not one to sound alarms unnecessarily, but what I'm seeing right now in the precious metals market, it's keeping me up at night. And if you have any significant retirement savings sitting in traditional accounts, you need to hear this. Gold just crossed $3,400 per ounce. Silver blew past $67. These aren't just numbers on a screen. These are warning signals, and the people who understand what they mean are already moving. Let me show you what's really happening behind the scenes. Central banks are buying gold at a pace we haven't seen in over 50 years. They added over 1,000 tons last year alone. Think about that. These are the institutions that print money, that control interest rates, that supposedly have all the confidence in the world in their own currencies. And they're dumping dollars for physical metal as fast as they can ship it. The People's Bank of China has been on a buying spree for 18 consecutive months. Poland just announced they're doubling their gold reserves. India, Turkey, Singapore. The list goes on. These aren't random decisions. These are coordinated moves by people who see something coming. But here's what really matters to you and your retirement savings. The dollar is losing its grip. I know that sounds dramatic, but look at the evidence. The BRICS nations just announced a new settlement system that bypasses the dollar entirely. Saudi Arabia is now accepting yuan for oil sales. France just completed a liquefied natural gas transaction in yuan. The foundation of dollar dominance, the thing that's kept your savings valuable for decades, is cracking. And when that foundation breaks, everything denominated in dollars loses purchasing power. Your 401k, your IRA, your pension, all of it. Now, I want to be clear about something. This isn't about doom and gloom. This is about understanding the game that's being played and positioning yourself accordingly. The wealthy already know this. They've been moving assets for months. The question is, are you going to wait until everyone else figures it out? Or are you going to act while there's still time? Let me tell you a story that illustrates exactly what I'm talking about. In 1971, President Nixon closed the gold window, ended the Bretton Woods system. Suddenly, the dollar wasn't backed by anything except faith in the government. Most people didn't understand what that meant. They kept their savings in cash, in bonds, in traditional investments. They trusted the system, but a small group of investors saw what was coming. They understood that when you remove the anchor, the ship starts to drift. And they moved heavily into gold. Over the next 9 years, gold went from $35 an ounce to $850. That's a 2,300% increase. The people who made that move didn't just preserve their wealth. They multiplied it 23 times over while everyone else watched their purchasing power evaporate through inflation. We're at a similar inflection point right now, maybe even more significant. The difference is, this time, it's not just the United States making monetary policy mistakes. It's the entire Western financial system. The European Central Bank is trapped. The Bank of Japan just abandoned yield curve control. The Federal Reserve is stuck between crushing inflation and crashing the economy. There's no good option left, and the smart money knows it. Look at what's happening in the physical market. Premiums on silver coins are through the roof. Dealers are reporting delivery delays of 6 to 8 weeks. The U.S. Mint had to ration silver eagles because they can't keep up with demand. This isn't speculation. This is real people, with real money, trying to get their hands on physical metal. Why? Because they understand something crucial. There's a massive disconnect between the paper market and the physical market. On the COMEX, you can buy and sell gold and silver contracts all day long. Billions of dollars change hands, but only a tiny fraction of those contracts ever result in physical delivery. It's a paper game, a casino where the house controls the odds. But in the physical market, you can't print more gold. You can't create silver out of thin air. Supply is limited, and when demand exceeds supply, prices have to rise. It's not a theory, it's mathematics. Here's where it gets really interesting. The industrial demand for silver is exploding. Every solar panel requires about 1 ounce of silver. The solar industry is projected to consume over 200 million ounces this year alone. Electric vehicles use twice as much silver as traditional cars. 5G infrastructure, AI data centers, defense systems, all of them require massive amounts of silver. And we're not mining enough to keep up. Global silver production has been essentially flat for years. The easy deposits are gone. New mines take a decade to develop. Meanwhile, demand is accelerating. We're heading toward a supply deficit that could make the semiconductor shortage look like a minor inconvenience. What happens when critical industries are competing with investors for a limited supply of metal? Prices go vertical. And the people holding physical silver are going to be in a very, very good position. Now, If you're sitting on retirement savings right now, you might be thinking, this sounds important, but what am I supposed to do about it? Quick aside here. If you have $100,000 or more in traditional retirement accounts, there's actually a way to get physical gold and silver into those accounts without triggering taxes or penalties. It's called a gold IRA, and I put together a free guide that walks through exactly how it works. You'll find it in the description below. It covers the process, the rules, the companies that handle it properly. Worth looking at if you want to protect your retirement savings with physical metals. All right, back to what's happening in the market. The institutional money is starting to move. BlackRock's gold ETF has seen massive inflows. Bridgewater Associates increased their gold position by 34% last quarter. Paul Tudor Jones went on record saying he's long gold and Bitcoin because he doesn't trust fiat currency anymore. These aren't fringe players. These are the biggest names in finance. And they're not buying gold because they think it's going to go up 10 or 15%. They're buying because they think the entire monetary system is at risk. Let me give you another historical parallel that's eerily similar to today. In 2008, right before the financial crisis, gold was trading around $800 an ounce. Most people thought it was expensive. After all, it had already gone up significantly from its lows. The mainstream financial media was calling it a bubble. Gold has no yield, they said. It's a barbarous relic. Then Lehman Brothers collapsed. Bear Stearns failed. The entire banking system nearly imploded. And suddenly, everyone wanted gold. By 2011, it hit $1,900. The people who bought at $800, thinking they were late to the party, more than doubled their money while stock portfolios were getting destroyed. But here's the thing. The problems that caused the 2008 crisis never got fixed. They got papered over with trillions of dollars in money printing. The debt got bigger. The derivatives got more complex. The system got more fragile. And now we're dealing with the consequences. Government debt levels are at all-time highs. The U.S. is paying over $1 trillion a year just in interest. That's more than the defense budget, more than Medicare. It's unsustainable, and everyone knows it. The only way out is to inflate the debt away, which means destroying the purchasing power of the dollar. Your retirement savings are denominated in dollars. When the dollar loses value, your savings lose value. It's that simple. But gold and silver don't have that problem. They're not someone else's liability. They can't be printed. They can't be devalued by government decree. They've been money for 5,000 years, and they'll still be money long after today's fiat currencies are forgotten. Now, I want to address something that comes up a lot. People say, but gold doesn't pay dividends. It doesn't generate income. Why would I hold it? That's the wrong way to think about it. Gold isn't an investment. It's insurance. It's the asset you hold to protect against the failure of everything else. When stocks crash, gold holds value. When bonds default, gold holds value. When currencies collapse, gold holds value. That's its purpose. And right now, with everything that's happening in the financial system, insurance is looking pretty smart. Look at what happened in Turkey. Their currency lost 80% of its value over the past few years. People who kept their savings in lira got wiped out. But the people who converted to gold, they preserved their wealth. They can still buy the same amount of goods and services. The metal protected them. The same thing happened in Venezuela, in Argentina, in Zimbabwe, in Weimar Germany. Every time a currency fails, the people holding gold survive. The people holding paper don't. And before you think, that can't happen here, remember that every failed currency in history was once considered stable. Every government that printed itself into oblivion thought it was different. They all believed they could manage it, control it, engineer a soft landing. They were all wrong. The United States has some unique advantages. The dollar is still the global reserve currency. We have the largest military. We have the most liquid financial markets. But those advantages are eroding. And when the reserve currency fails, the consequences are global. That's why this is so time sensitive. Right now, you can still buy gold and silver at reasonable prices. Yes, they're at all-time highs in dollar terms, but they're still undervalued relative to the money supply. The ratio of gold to global debt is at historic lows. There's still time to position yourself before the real move happens, but that window is closing. When the general public finally understands what's happening, when the panic sets in, you won't be able to get physical metal at any price. Dealers will be sold out. Premiums will be astronomical. The government might even restrict sales or impose windfall taxes. It's happened before. In 1933, President Roosevelt signed Executive Order 6102, making it illegal for U.S. citizens to own gold. The government confiscated private gold holdings and paid $20.67 per ounce. Then they immediately revalued gold to $35 per ounce. Instant 69% wealth transfer from citizens to the government. Could it happen again? I don't know. But I do know that governments get desperate when they're broke. And right now, governments around the world are more broke than they've ever been. That's why physical possession matters. If you own gold through an ETF, you don't really own gold. You own a claim on gold that someone else is holding. If there's a crisis, if there's a run on the fund, if the government decides to intervene, you might not get your metal. But if you have physical gold and silver in your possession or in a secure vault that you control, nobody can take it from you. It's yours. That's real wealth. That's real security. Now let's talk about silver specifically, because I think silver might be the bigger opportunity right now. The gold to silver ratio is currently around 50 to 1. Historically, it's been closer to 15 to 1. In the ground, it's mined at about 8 to 1. So silver is dramatically undervalued relative to gold. When that ratio corrects, and it will, silver is going to move much faster than gold. We saw this in 2011. Gold went from $1,000 to $1,900, a 90% gain. Silver went from $17 to $49, a 188% gain. Silver is more volatile, but that volatility works in your favor when the trend is up. And the trend is definitely up. The supply-demand fundamentals for silver are better than they've been in decades. We're running a structural deficit. Industrial demand is growing faster than mining supply. Investment demand is accelerating. And unlike gold, most silver gets consumed. It's used in manufacturing and never recovered. That means the above-ground supply is actually shrinking. Think about what that means for prices. If you're an electronics manufacturer and you need silver to build your products, you're going to pay whatever it takes to get it. You can't just decide not to use silver. It's essential. So as supply gets tighter, prices have to rise to ration the available metal, and investors are starting to figure this out. Silver ETF holdings are climbing. Retail demand for coins and bars is at record levels. The Perth Mint in Australia reported their highest sales in over a decade. The Royal Canadian Mint is struggling to keep up with orders. This is real demand from real people who see what's coming. But here's the critical point. The time to act is before everyone else figures it out. Once the mainstream catches on, once the financial media starts talking about it, once your neighbors are asking how to buy silver, it's too late to get in at good prices. We're in that brief window right now where the smart money is moving, but the crowd hasn't arrived yet. The people who understand monetary history, who understand supply and demand, who understand what central banks are doing, they're buying. The question is, are you going to join them? I want to be clear about something. I'm not telling you to put 100% of your savings into metals. That would be reckless. Diversification matters. But if you have zero exposure to gold and silver right now, you're taking a massive risk. You're betting that the current monetary system is going to hold together, that governments are going to get their spending under control, that inflation is going to stay manageable. Are you really comfortable making that bet with your retirement? Because the people who run the system aren't comfortable with it. That's why they're buying gold. That's why central banks are accumulating at record pace. They know the math doesn't work. They know the debt can't be repaid. They know the only way out is inflation. And they're protecting themselves. You should too. Look, I get it. This is uncomfortable. It's scary to think that the financial system you've trusted your whole life might not be as stable as you thought. It's easier to ignore it, to hope everything works out, to trust that someone else will fix it. But hope is not a strategy. And the people who wait for certainty are going to be the ones who lose. The evidence is right in front of us. Record gold prices, record silver demand, central banks buying, institutional money moving, supply deficits, currency debasement, geopolitical instability. All the pieces are in place for a massive move in precious metals. The only question is whether you're going to position yourself to benefit from it or whether you're going to watch from the sidelines while your purchasing power evaporates. I've been studying markets for over 2 decades. I've seen bubbles form and pop. I've seen crashes and recoveries. I've seen fortunes made and lost. And I can tell you with absolute certainty that what's happening right now in precious metals is not a bubble. It's a fundamental repricing based on monetary reality. Gold and silver aren't going up because of speculation or hype. They're going up because the alternatives are failing. The dollar is losing value. Bonds are offering negative real returns. Stocks are priced for perfection in an imperfect world. Real estate is unaffordable for most people. Where else are you supposed to put your wealth? Metals are the only asset class that doesn't depend on someone else's promise. They're not a liability on someone else's balance sheet. They're not subject to counterparty risk. They're real, tangible wealth that's been recognized as money for thousands of years. And right now, they're telling us something important. They're telling us that the monetary system is under stress, that confidence is eroding, that people are looking for safety. And when people look for safety in a financial crisis, they always come back to gold and silver. Always. So here's what I want you to do. Take a serious look at your retirement savings. Look at how much you have in stocks, bonds, cash. Ask yourself honestly, if the dollar loses 30% of its value over the next few years, what happens to my retirement? Because that's not a crazy scenario. That's what happened in the 1970s. And the conditions today are worse than they were then. Then ask yourself, what percentage of my savings should I have in assets that can't be devalued by government policy? For most people, that number should be at least 10 to 20%. Maybe more depending on your situation and risk tolerance. And if you're not there yet, if you have zero exposure to precious metals, you need to change that. Not next month. Not when you have more time to research. Now. Because every day you wait is another day the dollar loses purchasing power. Another day the debt grows. Another day the system gets more unstable. The people who act early are the ones who benefit most. The people who wait for confirmation, who wait for the mainstream to validate their decision, they're the ones who buy at the top and panic at the bottom. Don't be that person. Look, I know this is a lot to process. I know it goes against everything you've been taught about investing. But sometimes the conventional wisdom is wrong. Sometimes the crowd is heading in the wrong direction. And sometimes the uncomfortable truth is the one you need to hear. Your retirement savings are too important to leave to chance. Too important to trust to a system that's showing cracks. Too important to ignore the warning signs that are flashing red right now. Gold and silver aren't perfect. They're volatile. They don't pay dividends. They can be difficult to store and transport, but they have one critical advantage that nothing else can match. They preserve wealth when everything else fails. And right now, with everything that's happening in the world, that's exactly what you need. So take action. Do your research. Talk to a reputable dealer. Look into a gold IRA if you want to protect your retirement accounts. Buy some physical coins or bars if you want something you can hold. Just do something. Because the time to prepare for a crisis is before it happens. Once it's here, it's too late. The people who protected themselves in advance are the ones who survive and thrive. The people who waited are the ones who lose everything. Don't let that be you. The metals market is sending a clear signal right now. The question is, are you listening?